What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for April 20th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So as you can see, Tesla with all of the red came in at 8 point or 0.85 adjusted versus 0.85 estimates. Q1 revenue is 23.33 billion versus 23.21 billion estimate. Q1 cash flow is 441 million estimated, 3.24 billion. So big hit on cash flow. There's been a lot of cuts on the Model Y. Model Y has definitely been one of the best selling cars over the past quarter. Um, it's just a very tough time. We are in recession numbers, and this is something I've been talking about. We are going to see recessionary like numbers because we are in a recession. We have been in a recession. Very lagging indicators on a lot of different things. And this is why I always point to earnings, because earnings will give you more accurate numbers compared to all the other data out there that's so lagging. And even being said, even the 25-point basis move that we had on the last monetary policy, we're still not feeling the full impact of that yet. And they're still projecting another 25-point basis move coming into May. Now, with that being said, this sets up a scenario in which tomorrow Tesla can get some downgrades and get some heavy sell pressure. The market has been waiting for earnings. Yes, the big five, big 10 banks did very well. Of course, they're going to be thriving, but your mid cap or your mid-size and smaller banks are in a very, very fragile state. You have to understand that, and with these rate increases that are going to continue or going to put more pressure on them, and understand that if they give, right, they hold a lot of the commercial loans, they hold a lot of small business loans as well. And you have to understand that these small businesses, if they go under, right, that's a huge part of the workforce. So we've only seen a massive amount of cuts in big tech. Next is a lot of these other industries are going to get hit heavy by layoffs. And then understand that, the market, just as of right now, is starting to see this, right? The Fed just started talking about mild recession. First, it was soft landing, then it was no landing. Now it's a mild recession. There is no such thing as a mild recession. They're trying to ease the skids. And again, I believe on May 3rd, on the next monetary policy, they're going to have a united front and say we are in a recession. Now we'll start seeing if we start selling into that. I don't know if it's going to happen. I have a strong feeling it will happen around May 3rd. That we will essentially, quote unquote, price in a recession at that point. And so I think if we get another big set of bad earnings next week, because we got blackout period for the Fed, then you're going to roll into the last what I consider the big week of earnings, because you'll get Apple, Microsoft next week, and then whatever you don't get next week, you're going to get the following week, whether that's Amazon or Google or any of those as well. So you got back-to-back weeks where you got those bigger corporations giving earnings. And so with that being said, after the same week as the monetary policy, the market has pretty much made up its mind. And yes, earnings will continue throughout the quarter, but the market will make up its decision on what it's going to do. And if it feels like it's a recession time period, and then potentially we have, Powell and Yellen and everybody coming out saying, yeah, we're in a recession. It's going to be a mild recession, though, and then the market will just price that in. I do not believe that it's been priced in. I think all last year was a battle of inflation and what was going to happen, and we would just pivot and there would be no recession. That's what we battled with last year. This year is not the same. This year we are going through a recession. You have to understand there's multiple stages that we've gone through, right? We had the pandemic, we had the printing of the 40% of the money. Then it was a battle against inflation. Now we are the battle against the final stage, the battle against essentially the recession. And then after this stage finishes, right, then it's okay, where's demand? Now we have to quantitative ease to strike demand again, because essentially you're going to obliterate everybody. You have to understand this move that we had over the past 2 years, and something I always depict, which we can flip back over to the SPX. this move that has happened over 2 years is a monstrous move, right? This is 40% of the money supply printed. This can't be all we get out of this move, right? You're going to get a bigger hit. And this is what I've been talking about. This area is normalization. Not saying we have to go deep into the zone, but if we can get as close as we can to the 3,200, I would be more at ease to understand that, yes, now we could continue up, that would be a big enough price in recession that we could ultimately we could recover from, because I think you start destroying a lot of small businesses. That's just absolutely going to obliterate everything. And then again, you have to understand the small business encompasses a lot of the workforce, a very huge chunk of the workforce. And so if that does happen, that things are going to get very grim, and then you're going to have to start cutting checks again to try to hopefully draw demand and spending again, and see where we're at. And so again, I don't believe that's at all priced in. And again, the main theme from the administration and from Fed and everybody else has been that there would be no recession, but that is starting to change. And this is why I talk about United Front. We could potentially see on May 3rd, if we get more bad earnings next week and the week after going into monetary policy, then we start pricing in a recession. And then at the bottom of that is the bottom. And then we recover from there. Then we move into the next stage. Well, when is demand going to come back? Right. And this is the bad thing about deflation. It's even worse than inflation, because you kill demand so bad that you need something to happen. And this is what Powell is talking about, the pain. He needs to see that kind of pain to start quantitative easing, slashing interest rates, and then starting to cut more checks again to try to draw demand again. And then if demand, you don't know when the timing of that's going to be, just like we didn't know the timing of this potential recession being priced in. We don't know when. We knew it was going to happen. We didn't know how long it was going to take to get there. And then it'll be the same kind of thing when we're trying to actually recover from a pivot. So with that being said, we'll see what happens here, but that's what we're looking at. I think Tesla could be the start of this whole thing. Again, the average typical recession is roughly around 43%, I believe it is. And from peak to the trough thus far has only been 27. So you go down roughly to 2,800. That would be your average recession. Now, even if we did hit this low, I don't believe it will last very long. I think it could very much be a monthly candle that comes down, touches that, and then wicks up, and then we start pushing up. I think it's a very strong possibility, and everything kind of would lead. If we got a recession between now and July, August, and then we find the bottom of that, and then we started recovering off that, because I think this is going to bleed into Q3, but I think we could potentially pivot in Q3 and start pulling ourselves out of it. I do believe we can recover from recession quickly. But you understand it's very delayed. We're just now starting to see the effects of those things, right? And understand that just this time last year, it wasn't even this time last year, all these companies started stock splits, right? And so that's something you had to keep in mind, that they were waiting for this to happen. What's about ready to happen is what they were waiting and anticipating for. And now we're going to see that over the next couple months into Q2, all of Q2, and potentially part of Q3, I think. And then we recover, and then essentially around Q1, Q2 next year, we start quantitative. I think we're going to start quantitative easing as far as the cutting process in Q4 of this year, and then start issuing checks by next year, right into the election year. Is my thought process as of right now. So again, very light scaffolding, but that's kind of what I'm thinking right now. And then we go from there. And so again, I have to see what the events are. And again, events can change the dynamic of anything very, very quickly. So you do have to keep that in mind. But as of right now, that's what we got for the SPX. Tomorrow's going to be interesting. We'll see if Tesla starts pulling this thing down. Again, if the bulls want this thing to continue, you have to break out 4,200. Otherwise, I think we're going to reattempt here the 4,100. And then again, if we can break this level here, the 40.72, then I think you got another speed bump here, roughly around the 39.50, and then ultimately I think you're headed down to the 3,800. Question is how quick do we get down to 3,800? This particular fall was pretty quick. I took couple days to get there. I think it'll take a couple days to get down here, and then recession. Again, I think normal. You want normal, true normalization of all markets. The market needs to be down here for that to happen, and then we could have a strong recovery from there. And there's some new signal that came out. I don't even know what it is, because it's only happens like every once in a blue moon. And it was just given, I think, last week. And so with that being said, I think we could explode out of this, and this could be a huge boom cycle out of this. But you have to let the recession be priced in. Once that is priced in, that's final stage of this hasn't been priced in. Once it's priced in, then you get your boom cycle. And I think crypto will lead the way. I think a lot of the big tech will lead the way again, just like it did when we had quantitative easing after the pandemic. I think you're going to get another big cycle like that. Again, the more you print the money, right, you get bigger moves like this, right? And so we wait and we see. But tomorrow will be interesting. If Tesla gets downgraded, that could lead to a lot of heavy selling, and then we could potentially go from there. Now, Bitcoin, again, is starting to lose strength here. We'll see if it can hold at 2,800 or 28K. If not, it's at least coming back down to the 25, I think. I think this is still a new low. I still think this on the monthly is a dead cat bounce. Tesla is just like this dead cat bounce. I think we're headed for a new low. This massive move down, of course, you're going to get a dead cat bounce. Is essentially almost retraces almost 50% of that move, and then it just drops at that point to make a new low. And so this is my catch-all zone down here at the 10K. I don't know if we'll hit 10K or 8K mark down here. I think if for some chance we price in a recession and it hits this low, I don't think you're going to have a very long time in this area. I mean, you never know, but I think the economy is going to be really bad for many years to come. But nonetheless, I think we can recover quickly out of this, but we have to let it happen first. And so I think if we do come down this low, it won't be for very long. And then I think we could recover quickly out of this and then get ready for the next bull cycle, and Bitcoin halving too as well. So just keep that in sight. So that indicator essentially has that big boom cycle. I think it's very much a strong possibility after the recession is priced in. I think you're going to get a lot of quantitative easing very quickly after the fact. And then you're going to get a huge boom cycle again. I think is a very strong possibility, but we have to let this final piece play out. So we see Tesla, gold. Yeah, let's point out gold real quick. Gold is also aiming towards a recession. It's very strong. It does need to break over essentially the 195 and see if it can do that and start pushing up. I think gold will also lead during the recession, at least good part of the recession. I think over the next year, gold will be strong. Aside from that, I think the economy will kind of break away from there. Again, you're also fighting against BRICS and everything else, so you have to be very careful of that. And we'll see. And also, Gary Gensler is about ready to lose his job, so that we can get some people that can actually enforce and put regulation on crypto, because China is really trying to make some big moves, and Russia is trying to make some big moves on crypto, and the U.S. doesn't want to be left behind. But you got one man standing in the way, Gary Gensler. People are getting very upset at him, and he needs to move out of the way, make some regulations so we can stay on crypto. The U.S. very much believes in it. Is at least a lot of people do, and they're going after Gensler. Like, he needs to do something so we can get this thing moving. So we wait and we see. Tesla, like I said, just had earnings. I think this thing is really going to start selling. Got some key levels really to watch here. Obviously, the 165 is the first level. Then your next level is roughly around. There's some support here, roughly around the 140. And then you have some pretty big support of the 110. If it does break 110, you don't really have a lot of support here. You got some speed bumps that we could potentially bounce off of. But your next really big signal is down to 55. I don't really think Tesla's going to come down to 55. It really depends on how bad this recession is. Do we really see us drop here? Because that would be a big drop if that was possible. If we broke the 100, that is a huge drop. If we're trying to pricing in a recession, who knows? It's a very strong possibility. But just like I talked about Bitcoin, you get a massive sell-off, a dead cat bounce. We'll see if this thing rolls over to a new low. We'll see from there. But Tesla, again, even though with everything going on, there's still a magnificent company. I still very much believe in them and what they're doing, and they're very innovative in a lot of things they do. Even though they've been slashing prices on the Model Y, they've been making up for it in a lot of other aspects in production, and making production even more efficient. So again, we'll see where this ends up tomorrow. There's no point really talking about the levels as far as downside. I talked about the downside levels, but we have to see how we open, and then see if we get downgraded, and see if Tesla is the one to start leading the way in pricing in a recession. BA, again, this thing hasn't even hardly moved. It's kind of annoying that it just sits here. It's a horrible company. It can't produce anything, and yet it's still standing where it is. So let's see if we can break the 220. Otherwise, like we keep saying, it's either that or the 195. We'll see what happens with that. If everything just starts pricing in recession, we'll see. But and again, Big 10 banks, a lot of them have huge deposits. Of course, they're going to be doing extremely well. It's the smaller and mid-sized banks that are struggling and potentially, hopefully, not going to go bankrupt here or fail. A very strong possibility. So we'll see if this will break out of the 144. Again, since this is a leading bank, I think even if the market starts pricing a recession, I think this thing is going to drop and just kind of hold and rattle. May hold here, but like I've always stated, it will fill that gap at some point. We just have to see when that's going to be. Goldman Sachs just kind of hovering again. Not the greatest of news, right? There's still a lot of delinquencies, and that's what we've seen across the banks. Is delinquencies are still getting really bad. Nothing has changed. Even the deposits they've been using and siphoning money out of to try to help recover stuff, that's dipped a little bit, like I think by 10 billion off of like I think it's like 149 billion to 139 billion, so 10 billion that they didn't need to take this week. So they're still taking lots of money. So just be mindful of that. But again, we'll see. Time will tell. Bank of America, again, not the greatest of earnings. Deposits still a huge problem. So we wait and see, right? I don't want to make this video too long. I think it's important to kind of just know basically what's going on. I think tomorrow is going to be important. What happens with Tesla, we'll see if it brings down the rest of the market. If there's starting to be some worrying concern going into Apple and Microsoft and Amazon, and we'll see if that plays in tomorrow, especially after Tesla. This is why Tesla and Netflix have kind of they greased the skids before everybody else, and why the scheduling is the way it is. So they can try to attempt to see what is potentially coming down the pipe. So again, we wait and we'll see. We'll see what tomorrow brings. It'll be an interesting day. It'll be an interesting rest of the week on how this thing plays out, going into another huge 2 weeks with a lot of big earnings and monetary policy right around the corner. So if you have made it this far, go ahead and drop a like, and I'll see you guys on the next one.